Hello, everyone. Welcome to KatKast, the podcast where governance meets growth. I'm Katherine, founder of KatKast Solutions and Secretary General at Access. So, over the past decade, I've worked across finance, technology, and mission-driven ecosystems, helping scale startups across APAC while building for public goods. So, KatKast is the channel where we explore real mechanics of innovation, from DAO governance, staking policy, to financial inclusion, on-chain education, and the future of public goods. So if you care about how systems scale and who they serve, you're in the right place. So let's dive in. Okay, today we're talking with Kevin Mehrabi. He's been active in the Tezos ecosystem, building projects like USDTez, Tezos, and Tezfin. So for context, Kevin and I first connected when I joined the Tezos ecosystem back in 2020. It was the first on-chain governance project that I participated in. And fast forward 5 years to today, my own focus at KatKast, which is my venture builder, remains governance and ecosystem growth focus in Asia. So I'm looking forward to discussing with Kevin about how applied governance works with DeFi experiments, whether that's in stablecoin design, cross-chain infra, or lending protocols. So Kevin, thanks so much for joining KatKast today. It's great to
Thank you
have
for
you on the
having me.
show. Yeah, it's we've been planning this for like months. So
Yeah,
yeah,
and you're so well
it's
prepared too. You like just
okay.
the right levels of reminders, everything very professional.
Thank
So good.
you. Yeah, thanks so much. Yeah, so to kick us off, can you just share what first drew you into the whole like blockchain space and what are you working on these days?
Yeah, well, the blockchain space to me, I think like a lot of people, it was the kind of exciting new disruptive force for all kinds of technologies and social systems and economic systems. And my background is technology entrepreneurship. I have 2 business degrees. I wasn't really into finance until
Yeah.
long after, through crypto, actually, through blockchain space. Um, and to coming to Tezos, before Tezos, I did not see myself as getting behind any single ecosystem. I
Mm,
would generally felt like that's a crazy idea because all of these technologies are so diverse and constantly changing, and everything's cannibalizing everything else. And it's all open source. So to me, it was more like I didn't see the landscape of what was around, say, 6, 7 years ago as what was going to be around today. And that ended
yeah.
up kind of being true. But I knew when I learned about Tezos and I read the white paper, it's like, okay, I don't know what's going to be around, but I know Tezos is going to be around. And it has all to do with the on-chain governance. That was the big
Mm,
factor that changed everything in my viewpoint. So I knew I wanted to do finance on blockchain, and it went hand in hand with Tezos and Tezos with finance. So here I am doing it.
wow. But the Tezos ICO was back in 2017, right?
Yeah, technically it was a fundraiser back in 2017. Yeah, July 2017 or June 2017, and yeah, it lasted about 3 weeks. It was the most successful fundraiser of all time. Raised $232 million
Yeah.
when they were only set out to make. They were only trying to raise 20 some million. But yeah, it was still, I think, arguably the most successful, depending on how you look at it. But
Yeah.
I think it definitely spoke to what was a lot of people were looking at that time, which was like, look, we need to do governance better. Those issues really surfaced at the time, and I
And
think
yeah. Mm. 100%. And now governance seems to be at decentralized governance specifically seems to be at the forefront of a lot of conversations in
Mhm.
Web3. And so let's start with Tezos itself, right? Because it's often called the first governance on-chain governance chain, or it's a governance first chain. And it's about self-amending governance meant to avoid forks and messy chain
Mhm.
splits. And we've both had a front row seat on how it plays out in practice and protocol upgrades. And can
Yeah.
you maybe share a little bit about how, since you're still within the Tezos ecosystem, how it directly influences the projects that you're building or directions of one of your projects? Yeah.
Yeah, I mean, it like the difference is between what Tesla does and what other ecosystems do is they might have some kind of an on-chain vote, um, or at best, but it's not as though there is this autonomous system where it's the actual validators who design and iterate and debate effectively on chain. to which it really, the blockchain itself manifests the that iterative process that comes up with the upgrades of a chain. And so what they do on most other chains is they fork the blockchain. They say, okay, everybody, come over here, upgrade your nodes to this, because this is what we're doing now. And like that really, I mean, that's a centralized system because you ultimately have to trust a single foundation or a single team or a founder to say, yep, this is what it is. And there all has to be that kind of spoken or unspoken belief in that. Whereas in the Tezos ecosystem, principally Tezos Foundation, even though they have validators, always vote pass on it. They do not want to have any influence on what happens on chain. And there's been, it's not a rubber stamp. There have been many contentions in which the bigger network did not agree. And we had to go and restart the governance process. But every time it led to a kind of reconciliation and resolution that we wouldn't have had otherwise. And so, and it went to show, and it built in these sort of natural inlets and inroads of people's thought processes and intellectual capital that they're donating effectively or fighting with to advance the chain in a way that they feel is better. So, and it's gotten more contentious in a good time, which is kind of a strange thing to say as a good thing because, but it is a good thing because it's all happening on chain in the right place. So it's good conflict. Conflict is a healthy thing if it's manifested the right way.
It sounds like, it's interesting to hear that the foundation wallets are abstaining from the votes. That's a sense of, giving a bit more fairness to the system. And when you're talking about contentious votes and interesting discussions being consolidated, right, in one forum, I think Tezos is on Agora forums, if I'm not mistaken.
There's tezosagora.org, and anybody can go there and see the debates happening.
Yeah, and when you talk about these debates, you wrote this article on good friction and bad friction. Do you think that it was really well written, by the way? I had a look at it. It was like really, really well thought out. And I wanted to take some the parts from your essay into this and build it into this conversation. Do you think that this is a sort of kind of good friction that you're seeing in these debates that make systems more resilient?
Oh yeah, I definitely feel there's a common thread there, and the subject of what I was talking about in that article, the good friction, bad friction that I published on X, and that was directed more towards incentive programs and how we shouldn't always think about what's easiest for the person to the effect of like greasing the wheel, because if we go to the logical extreme of that, well, what's more friction for the outsider is don't even come in. That's removing all the ultimate step there. And I think we have to make, there's good friction, that there's bad friction to get rid of, which is, clunky steps and trying to make sure that you have a good user experience and make sure that everything is having all the right support rails. But the good friction is when you have them try a process which they might not have done otherwise. If you're having incentive programs for something, well, the incentives override friction. It gets them to do the things that they otherwise wouldn't do. So as long as we have them in that position, well, we might as well be having them acclimate and utilize the tooling that they really should. I mean, it's kind of the point in the end, bringing more people into Tezos. So that was more towards about the incentives for Etherlink Apple Farm, and using them in a way that's more integrated. So, but there's a common thread there, because I think there are those who might even say for on-chain governance that like, oh, well, that could take more time for things. What if they don't agree? Then whenever that happens in Tezos, you have to restart the governance process. It's like, it's worth it. It's worth it. And ultimately, we become better at understanding each other, and we can think as sort of this hive mind organism in a way that, because it's not just a technology, it's people, it's these bakers, it's their entities, it's these different, there's politics involved. And for things to get efficient, and ultimately everybody wants what's best for the chain, that we would have that inclination to want to improve cohesively. And so that's a very good thing. Moreover, it also harnesses the contributions from people all over the world. Whereas in a lot of other blockchains, if you want to contribute to the development of a blockchain protocol, you got to be part of the founding team. It's rare that you would necessarily have that kind of cred to influence things in that way. Whereas in Tezos, it's very much encouraged. So if you play that out and scale it out, well, we'll be attracting people coming from all over, from all different chains, because their voice can be heard here, and their innovations and those contributions can be had here. So I think it's the same thing in thinking like, this is good friction to have, and we're better off for it. Just like a user that's adopting the Tezos ecosystem, maybe they're coming from Ethereum, maybe they're coming from the EVM side, they've only used MetaMask, and maybe it's a lot easier to say, hey, we got their liquidity in the door if we're just saying, hey, bridge it over to here. We made it a one-click thing for you. You don't even have to leave. You can stay exactly where you are. We'll come to you. And it's like, okay, but that's also just as equally positioned to leave once the incentive is done. Whereas if we say, all right, let's add a little bit of good friction. How about you come to create a Tezos wallet? Hey, we're giving you money. It's an incentive. I mean, you can't make a Tezos wallet. I mean, I guess you don't. It's not really asking that much, especially if they've gone through the ringer once. And then maybe bridge something over to the Etherlink side. At that point, it induces a sense of adoption that they're only going to want to escalate. So we want to escalate commitment by way of having that interactive experience and using incentives to override the frictions that would get them there. That's a good thing. And we need to, I think, feel also the courage of our conviction that people will like it once they get a Tezos wallet, that they're going to want to stay, that it's a great thing to have.
Yeah, I recall the times when, in terms of dApp adoption, there was I believe there's still a very active art community on Tezos.
Oh yeah,
there was the whole
huge.
the NFT art scene, and yes, I believe like it's still very, very active. I think Object was one of the major marketplaces.
Yep.
And it actually does speak to what you're saying about people becoming sticky on a platform, Chris. You want to avoid mercenary capital, right? That capital that just does maximal value extraction, and then they exit with their liquidity. I'm curious to know what's been happening, because I honestly haven't touched my Tezos wallet in a long while. I just buy and hold art pieces. I'm not an active trader.
For sure.
I tend to just stake and then just forget about it. So curious to know, like, what's been happening in Tezos land.
Yeah, well, definitely the art scene is still the most popular thing, and we in the ecosystem, if you remember, like we kind of fell into that by accident. I really feel there was no a concerted effort or centralized effort or big push by the foundation to succeed in art. It just happened to be that, first of all, our technology was advanced enough to be able to support low-cost gas transactions at the rate and speed that art needed it, at a time when there were no other alternatives. There weren't any Ethereum EVM L2s. There weren't any Solanas out there or stuff like that. They were coming. They weren't there soon enough. Not in the very beginning of 2021.
I recall the transaction cost for one small transaction cost me hundreds of dollars in gas fees at
Ethereum.
one point. That was crazy. Yeah.
Oh, I paid a gas fee the other day that was nearly $100 on Ethereum.
Oh wow.
So that's the thing. It wasn't really consistent. That was the biggest problem, and the lack of consistency, but also the fact that, look, they were, at the time, NFTs had been taken off. It was a household thing. They were talking about it on Saturday Night Live, but like nobody could really participate, because whether you're a buyer or an artist, even just to go and mint, just to try out minting, or even just to send the ETH to the wallet where you would, like, that cost gas, that cost ETH. And for most people, you aren't willing to pay that much on something you're trying out for the first time. Whereas on Tezos, it was virtually free. In fact, it was so cheap, less than a penny, that people were just giving each other Tez to get started. Giving someone like $1 worth of Tez or 50 cents worth of Tez, it was enough to activate their wallet and enough for them to start minting, for them to start collecting. I mean, they could, and because of that, you could actually mint and sell very low cost pieces. Because again, if you have to pay a $50 fee to buy it or to mint it, you're not gonna sell something that's worth $1. It's gonna have to be something worth the cost of gas and then more. A lot more. So it really wasn't a great enabler. It was a great exposure, that what Ethereum NFTs were at the time. But then Tezos came in, and now suddenly the 99.9% of the world that had no access to this stuff because it was cost prohibitive suddenly could participate. And they came in by the masses, and we had tens of thousands of people joining Tezos all the time, which is even, you know, bigger than back then, especially than it even sounds today. I mean, we were getting like we weren't even used to that in Tezos. It was the same few hundred people all the time that were active, and it was just mostly people who cared about either the coin and making that price go up, and they just wanted to see that, or they cared about this decentralized ecosystem and its governance, like, and maybe wanted to build other stuff. But yeah, we came into it. Now, the thing about that is we have a really great commerce sector in Tezos because of that. Fine art is our mainstay in commerce. And what's great about it is, for one thing, you can keep making art. It's not like this finite thing to run out of. It's very atomized in its community. There are so many different artists and so many different communities behind those respective different artists, and so many different collections that people get, you know, so it's not like some monolith of like, here's this PFP 10K, like Bored Apes. Well, then if that's it, then the masses of people just, they either go with it or they don't. They all come and leave together, and it's very dependent on so it's not a very good economic instrument. But fine art is different. Fine art is not like that. It's not commercial. And the other thing is, people want the art in the end because they want the art. They like it. They want to have it in their collection. It's intrinsic value. There are very few things in blockchain where you can say people want that thing for its intrinsic value because of the emotional resonance that it gives it. How many things in blockchain can we say that about? Really only fine art, not something you're trying to flip, just something because you want. So when you combine that with a credit system, then you can have massive economic scaling. And that's the one thing we're missing in Tezos DeFi today, for the benefit of artists, but overall, scaled lending pools, specifically USD lending pools. So hopefully, you know, we just actually the other day finished bridging the bridging contracts for the lending pools, the USD lending pools on Tezfin, Tezos.finance, for Etherlink. So now we'll be able to bridge over those liquidity tokens over to Etherlink, and using the incentive software that's there, the incentive middleware that's on Etherlink, we could actually incentivize these L1 pools from the L2, because implicit in the bridged asset, it's effectively a receipt that says this thing exists on the L1. So, you know, I think that would be a great next step, but we'll see. We'll see what happens.
That's exciting. Yeah, let's double click into that, into liquidity pools, right? Because governance is not just about how decisions get made, it's also how protocols resolve collectively that cold start problem, because generally without liquidity there's no growth, right? Like, and it's exciting to hear what you're saying about Etherlink. But let's go back in time a little bit, because I wanted to talk about, there was this AMA you did with where someone brought up Compound back in 2020, when they cracked the whole problem with the cold start problem with the comp token to incentivize liquidity, because it was both a governance token and it was also a way to accumulate, for users to earn yield at the same time accumulate comp, which gave them a voice in how the protocol evolved governance wise, and it bootstrapped both sides of the market. Supply and demand. And in many ways, comp kicked off DeFi summer, right? Because every protocol just suddenly saw governance not just as like a voting tool, but liquidity magnets in a way. But when you think about comp, like, what do you think made it work well? Was it timing, design, just being first, or just
I think it really comes down to, and what I really admire about that Compound team is that they didn't rush to create this governance token and deploy it. They started by deploying Compound, the platform, and getting lending and borrowing going. And they were able to scale it on its own to the hundreds of millions, the low hundreds of millions. And of course, when they did release the comp token, it scaled to the billions very quickly. But they didn't start I think a lot of people thought they started there, but no. They had been around for quite some time. And that's what made ultimately everything successful, including and especially the comp token. And I think that's a great way to do stuff, because the mistake that I see a lot of entrepreneurs make, a lot of founders in the DeFi space, is I think there's a lot of anxiety about launching with a low liquidity, or they want to make sure that it's in there very fast, or they think that that would solve everything. And that's not how it works. Your product is what you need to get people to keep coming back to. And it's not going to be perfect at first. In fact, it's probably not going to be very good at first. You're going to have to discover the problems, get the feedback loop, iterate on it. And those issues that you would need to iterate on and the things that you will discover, they're not going to be revealed to you if you're obscuring that feedback with incentives. So everyone's going to tell you they love you because they're getting paid, and so they're happy. But you're not going to necessarily look at any of the negative feedback, and if you could find any, or anything that's constructive, things for improvement. And eventually you either run out of that kind of governance, that incentivizing token to give, or you flooded the market with it and now it's not worth anything. And at that point, it's like, well, where did all the people go who said that they loved this and they were using it every day? It's like, well, they went away because the incentive went away. Now you gave away all your incentive tokens, so you've lowered your credibility on that front. You probably spent a lot of money on that end, and you have no idea how to make your product better because for all the past several months, everyone's just been telling you were great. And that's a really hard place for a lot of the founders to be. The better way to go about it is just launch raw and then figure out what is the minimum you need to solve that cold start problem, so that people who want to use it, they want to give it a shot. Like, it can't start at zero. It can't start at $1. It has to be enough depth of liquidity that people can start participating without concern that, well, these numbers look great, but as soon as I put in $10, my APY projections will go down to zero. Can't be that. But it can't also be so large that they'll put in and it's like, well, this is just a drop in the ocean and I'm not really getting much of a reward for this. So they need to feel, people need to feel empowered, and that they're really a part of this and they're getting a benefit that others haven't seen yet. They want that undiscovered opportunity. But it can't be so obscure that it's like, wait, what am I doing? I don't want to be all alone here. So it's finding that balance, I think, is the right thing. Compound was able to do it the right way, and many other platforms were as well. Uniswap. Oh, Uniswap was so popular, I remember, through 2019, 2020. Yeah, well, I mean, it scaled because of Compound. I think that was really the catalyst for its own scaling. If you look at the timing of it, it's pretty lockstep for its growth. It trails it a little bit. And the Uniswap token didn't come out till quite some time after that. I think it was another year, maybe, if I remember it correctly. It was whenever Sushi came out. Anyway, or a few weeks later after that. But anyway, but I remember even while it was so popular and everybody was talking about Uniswap and people were already building the Tezos version of Uniswap, which was Dexter. If you went on Uniswap and you took like a major token, even like ETH to USDC, there were so many times you couldn't even trade more than $5 without seeing massive slippage. So it was a great idea and everyone believed in it because, well, once this thing scales, it'll be great. But there was so long when it was like, but it's not there yet. In fact, I'm not exaggerating. Like it was like maybe $50. You couldn't go deeper than $50 without having massive slippage. It was that bad. And you can go look at the numbers. It was just nothing. They had, when I first heard about Uniswap and they were built and Dexter was like announced and it was going to be built, I went to check out what Uniswap was about. They were only getting, I think, $200,000 in volume per week. That was what I had seen, which is now just like a tiny little speck of what they're doing today. But it's amazing. I mean, that's how it is sometimes. So I think on Tezos, we've had a great, in 2021, we were able to show that we have the potential to do what we need to do as a sovereign ecosystem. We were able to get $200 million in liquidity. We didn't even have subsidies. And more importantly, like we didn't even have any kind of foundation-based subsidies, which is what most, I think, blockchains rely on to get their initial liquidity in the door at the time. But we didn't even have lending systems, which is far more important. Without lending systems, you don't have an instrument of credit for which you can scale anything. It's only a matter of time before all the liquidity you attract in will bleed out. All the best you could do is try and slow it down. But without lending, I mean, it's like you have the greatest car in the world, but the engine is missing. And I think a lot of people actually even left and they're like, well, I guess something was wrong here. No. We were missing this major component. This is the most important component. And then once we actually, the Tezos protocol wasn't capable of facilitating lending platforms because of until the end of 2021 with a very key upgrade that came in with the Ito upgrade. But and within a year or so, we were able to launch the first platforms in the dead of the bear market. But I think what's happened on Tezos since then in DeFi, there was, I think, sort of a sidestep focus which can still be used well, as I mentioned, but Etherlink became kind of like, okay, let's have a very Etherlink-centric approach. Let's talk about how we can get liquidity from the EVM world in the door as efficiently as possible in a manner that's more optimized for a Tezos-based layer two, the EVM layer two. But what I think we've achieved everything we need to achieve on that end on the Etherlink front, and the platforms that built that, and it doesn't have that much liquidity compared to what we had in 2021 on Tezos layer one, but it doesn't need to. I mean, I think it's proven itself for all that it needs to. And what we need to do now is actually take this great vehicle for which I see Etherlink as a port city. I see it very
like
much
a
like a
bridge,
Singapore,
yeah.
like it's very like it is this connection to the outside world, this sort of at-large DeFi world that's very much defined by or very much encompassed by EVM, and we can actually export assets like things that are special to Tezos, things that are
Like
inherently valuable,
art.
which we don't have. Could be an art token of
Yeah.
sorts, but more DeFi, like Tez, I think is the most basic of it. But Sirius token, the liquidity baking token, that is something that can be bridged over and give access to people on the EVM world who wouldn't have otherwise been exposed. And then likewise, we can have this import-export economy with Etherlink, which serves as a very key sort of a land bridge to the EVM world. But we need to definitely always realign ourselves, and I think come to the point where it's like, oh yeah, what's on Tezos, native Tezos is better. It's inherently better. Michelson is a better language. The frameworks, and it takes a long time to build. We still have to build more tooling. There's a lot more to be desired, but it is fundamentally better. Because of so many great development choices that have been made and will continue to be made. Also, it's our ecosystem's environment. We don't have to build for something else. We actually have a say as this nimble environment on making a better blockchain. And so I'm really excited about the next layer two that will emerge, which is going to be Tezlink. Tezlink will be the Tezos native Michelson, and that is what I see as the flagship environment for layer twos on Tezos. And so it'll have a very steady connection between the L1. We'll be able to use tickets. We'll be able to employ formal verification in a manner that's just so perfect and ideal for finance. And finance itself, which already I think will take as institutional finance gets in the door, a great pleasure in seeing forkless upgrades on Tezos blockchain. Which definitely lowers their actuarial risk levels. But I think we have a really strong system, let alone Justice, which is the next roll-up environment to come, which will be a JavaScript environment. So I think it's great now, this Tezos X roadmap, which is what all of this stuff encompasses all together, as well as the RISC-V engine and the data availability layer, all this stuff together. It's something that's very nimble and adaptable to multiple environments out there in the world, while ultimately bringing that focus back to what's a great native sovereign ecosystem, and that is the Tezos Michelson environment. So
I like how you
very excited about that.
I like how you describe the Tezos ecosystem as a sovereign ecosystem. It's quite new. A lot of people call their ecosystems extremely decentralized, like decentralized max. Like and I feel like sometimes it's a little bit of a mask, because ultimately these treasuries of these DAOs or ecosystems are governed by a few players, really. And I'm curious to know, like, when you talked about these DeFi primitives that were initially not there, like the lending protocols, right? Like, how did that actually get baked into on-chain governance? Was it feedback from the community that enabled this upgrade, or like, how did it work out?
Yeah, well, definitely. When Tezos first started, there were design choices that were made in its architecture that was very particular and specific to avoid reentrancy attacks, and that was something that was a problem on a lot of applications that we saw on other blockchains. So it was done in a manner that it was built in a manner that would prevent that, but in the manner that it had been built, it didn't allow for the kinds of callbacks that we needed and the kinds of things that were needed for these types of
Depends.
high-performing DeFi applications. Yeah, that were you could do things like views and be able to read information and interact in a very responsive way. So adding that in and baking that into the fabric of the Tezos protocol, it took more time. So it wasn't ready on day one, but it took time. So it came to be by the Edo upgrade of 2021. And we were, before that, even then, we were still trying to make lending work on Tezos. We're still building our initial models, which we definitely started rewriting completely after that Edo upgrade, because it's like, all right, well, now we can do it the right way. But we were looking for types of workarounds, such as doing off-chain views, but this way we could do it totally on-chain. And definitely, I think the collective of those core developers and people contributing and discussions on on-chain governance on Agora and everywhere. Like, it was definitely very much seen like this is the kind of stuff, this is the area we need to compete. I'd say from just an economics point of view, the necessity of lending, I mean, it cannot be overstated. You can't really compare, you still can't really compare the prowess and potential of the Tezos DeFi ecosystem on native layer one without scaling these lending pools first, these USD lending pools, because that is the lifeblood that makes everything else grow. Without it, even our success, honestly, in art, it's arguable that it hurt the price of Tez more than it helped, because it's an argument to be made, because it's people would get their Tez, and yeah, they'd use their Tez that they've earned from selling art to maybe buy more art too. So there's some recycling that goes on directly in that way, but also they would take it to Coinbase or wherever else, and then they'd sell it for fiat or do whatever else they need to do. That kind of bleed out, that kind of capital flight, is what happens when you don't have a place where they could put their funds in to earn on interest and borrow against it, which is becoming more and more the norm for people even outside of DeFi interacting with Web3 applications. And I remember back in 2021 when we had those peak levels of liquidity, half of the liquidity at one point was for pools that were stable Tez, are the tokens that we put out for USDTez and ETHTez. So those liquidity providers, we were able to get feedback, through the cycle and everything, what they needed, what they wanted, when they wanted to redeem, and of course we made redemptions freely available that they could liquidate and go back to their collateral source. But they would say, is there anything like Compound or Aave where we could just park our funds and earn on interest or borrow against it? Like, they didn't want to, once you have your capital in the Tezos ecosystem, you don't really want to leave it unless you have no choice. Once you have it in any ecosystem, I think there is this human nature to want to diversify and cover all bases. So once they got it there, it's like, well, if any other opportunities come up on Tezos, I don't want to miss out on that. I should keep some liquidity here, but I don't just want it that liquidity sitting here twiddling its thumbs. I want it to at least be in a lending pool so I could do stuff with it. And we had to tell them, we don't have lending on Tezos yet. We'll get there, but you're going to have to be patient, maybe wait a year and a half. And then they were like, okay, well, in that case, I want my liquidity back, please. It's like, okay, totally understandable. But imagine if we had lending back then in 2021, I believe we would be one of the top, we'd be right up there with, I'd say Solana and Bitcoin as the top 3 non-EVM DeFi chains right now.
Very interesting.
But organic, unlike some chains out there. But yeah, that's the other thing. If you go and you look at DeFi Llama, and you look at like non-EVM, look, there's a section for blockchains, and then you could filter for non-EVM, and you could see the non-EVMs and how they're competing. They are much larger in their size than they were a year ago, which itself was much larger than where they were 2 years ago. I think 2 years ago, maybe a lot of people were counting out non-EVM chains, which to me was just ridiculous, because in finance, diversification is the name of the game. It can't all settle on Ethereum layer 1. That doesn't make any sense. Right? It can't all just be written in this one Solidity language. It doesn't make any sense. So, but now we're seeing all that innovation, diversification, because of all these non-EVM chains out there. So it's great to have the EVM layer 2s and to have that compatibility. But we need to start with this native sovereign ecosystem capital instruments first. So we have it with Tez, we have it with stablecoins. USDTez, we built that in 2020. It was the first USD stablecoin on Tezos, first fiat stablecoin on Tezos. There are algo stables like UVs, like Calibri. There are plenty of assets. There's Kipu Swap, there's Spicy Swap. There's so much out there that's been coming over the years. And I think a lot of more teams that can be very easily spurred to come to the Tezos environment. But we need to start by encapsulating the value sources and then and making sure that we scale up the very key pools that we need to enable recursive compounding growth. And those are the USD lending pools. So we're almost there. We're at the last mile. All of this stuff has been worth, greater than the sum of their parts. But I think people will be very delighted to see it once we get to that point. But almost there.
Yeah, I'm just curious to know, are there these, well, for example, Curve had these like vote-escrow tokens, CRV, and how do you pronounce it? VCRV, which boosted their voting power, and pools got Curve emissions, and that kind of like enabled them to boost their liquidity as well, because they could direct liquidity flows to the pools that get incentivized the most. Do you see that sort of innovation happening in the Tezos ecosystem for DeFi?
Yeah, we're seeing some experiments on that front. I see variants of it on the Etherlink side of things. Now, thus far, Etherlink had been used for more assets coming from outside, bridged into Etherlink, as opposed to Tezos native assets. We're starting to see, thankfully, improvements on that front, like with STXTZ being bridged over, and XTZ, of course, has been there. We're bridging assets over as well. I think more can be done. But now vesting is something that's been added to their more recent season of incentives. And then Apple Farm is a very interesting program that they launched, which is, it's the first real sort of subsidized experiment in incentive farming in the Tezos ecosystem, where the Tezos Foundation had been sponsoring of that. And so layer one, they were able to bring in some tens of millions in liquidity, but retention, of course, was very much an issue, particularly because these are assets and liquidity structures that are put on platforms that are just kind of born for capital flight. But then vesting became a thing where it's like, you can't just cash out immediately. You got to leave it in there for some time. And I think that reminded me, that's part of, we all know why vesting is great, but in terms of like an on-chain equivalent, I remember the first time I saw a real a testament to that was when I saw VECRV and how they gave options for how long you want to keep your collateral in that escrow so you can have the governance tokens. And it was, you would get a disproportionately high reward for how much longer you would keep it in. So what would be like, they want you to keep it there for years ultimately. So the incentive racks up that much higher to do it. And you start to think in your mind, well, in for a penny, in for a pound. You kind of start to hope for the best. Not everybody, but it does induce a sense of thought and confidence in maybe this is a good thing for the long haul. Maybe I am smart to do this. Maybe I should get a higher amount of emissions of reward for a longer commitment. After all, I do believe in this thing. That's very important, to be able to capitalize directly off of people's willingness to give their confidence to a platform or to a token. And by the way, I would draw a parallel to that with staking, which is something that is new to Tezos, because before June 2024, all you could do with your Tez was either bake or delegate your Tez to a baker. Liquid delegation, that was the name of the game. But since June 2024, we added staking, which gives 3 times as much rewards as delegating, and it has you lock up your Tez. So and then you have to wait a few days if you want to unlock it. That's huge. That's a very big difference. And for me especially, I had I had a Tez from the initial fundraiser that I had been delegating in their specific accounts I have for those. And it was just, liquid delegation for years, the same as anybody else who was kind of fly by night. Maybe I'll sell it today, maybe I'll sell it tomorrow, those kinds of people. And it's like, well, shouldn't my commitment shouldn't I be able to capitalize off of this commitment in a way that's a lot better? And staking, I think, allows for that. I would actually like to see us take a page from, that Curve playbook a little bit more, and maybe have tiered commitments with staking, where it's like, yeah, I can unstake in 4 days, but what if I agree to terms in which I can't unstake for a month or 6 months or a year? How could I get more
Mm,
reward for that? I think that's definitely worth it, because the people who are really
mm,
committed are going to be able to express that commitment with signing into a contract like that. Um, and you
yeah.
also distribute the governance token out in a way that is much more conducive to success of the protocol, which is what it's actually for. That's the actual utility. It's to vote on stuff. So you want the right people having that voting ability, and for the weight of their vote to reflect their commitment of best interest of what's for the platform or the protocol.
Yeah, it's interesting how you drew that parallel. I was gonna say I recall the Tez token is inflationary, yes. So
Mhm.
it inflates by 5-6% a year. So I was thinking like, okay, initially when it was just liquid
Yeah.
delegation, it was just an inflation hedge for me to just delegate. And then after that, when the staking function came in, I was like, oh yeah, this is very interesting. I get more rewards for locking up my
Mhm.
tokens. And with the delegate, with a baker that I trust, a delegate, I suppose that's what they call it.
Yeah,
And
Baker
yeah,
or delegate,
I
I guess.
but I think this is the volatile risk that I think the industry is still kind of grappling with, like the risk that the yield that you earn from your tokens is still going to be offset by the potential downside of the valuation if the native governance token tanks,
Mhm.
right? Like I think
Right.
that's something I'm still trying to figure out, like how to balance that risk. I don't know if you have any thoughts on that one.
Oh, well, I think that's also what this whole, because the staking rule that was added in June 2024, it came along with a couple other changes to the tokenomics of Tezos, which I
Yeah,
feel really accounted for this.
yeah.
In that, for one, because it does a few things. For one thing, it leads to a lot of that liquid Tez that you could measure as liquid Tez on circulating in the market as locked, as it's in staking, and now there's less available for liquid staking. So that risk of sudden capital flight, you can actually measure that as much lower potential than it was before. The
Mm,
other thing is, once it gets to the target ratio of 50% staking, the return, like the actual emissions, suddenly really drop. They drop down to just a fraction of a percent. And if it goes under the target, there's sort of an
mm,
overreaction to that issuance where it starts giving a lot more. Um, but that is what creates the sort of arbitrage opportunity where people who will be able to buy up and stake more Tez in case, say, some whale pulls out and floods a lot of Tez in the market and brings down the staking ratio. So there's
okay.
this embedded system that encourages, no, fill the gap, and it's competitive. It's like the fastest person to do that. I mean, you have to be vigilant about it. So eventually it'll be a lot of bots, but it cultivates inherently this competitive field where people want to make sure that we're always at that target. Um, and
Mm,
and so it takes a lot off the market. It of liquid Tez off the market. You see a lot, uh, uh, there, but also it encourages that to always be balanced in a situation in which more will be taken off the market and locked up, and the emissions will be low. But also the
yeah.
way that that translates down for delegators, people who are just kind of casual users of Tez, because like I have maybe most of the Tez I have is in staking, but I also have some that's liquid stuff I might spend, and little pocket money, right? But a lot of times I had been thinking over the years, like I think I
Mm,
definitely bought a lot. I bought a lot of art and I bought a lot of domains. There's a lot of stuff I've done with my Tez. I've spent a lot of Tez over the years, but
yeah.
even with the spending I've had, there was always this voice in my mind, which was, do I really want this? Because I could keep this in my wallet, this Tez in my wallet, and continue to earn the rewards, which were abundantly good. I mean, we're talking, over 5%. I mean, if this were interest rates or any other kind of equivalent you'd think of in other systems, like you would think that like it would just, if that happened in some
Mhm.
kind of like, I don't want to compare it because it's obviously a totally different system, but if interest rates were that, like if your liquid checking account were giving you those kinds of returns, people would never spend money. The economy would just stop. People wouldn't work. People wouldn't be spending. We'd have a
Yeah.
surge of unemployment. I mean, it just wouldn't. You wouldn't want that. So what this does by bringing down ultimately that emissions rate in a natural way, it lowers the opportunity cost of not delegating. And therefore, it
Mm,
takes away the inhibition of spending and usage in maybe other rewarding areas like collateralizing and lending, or using it for a synthetic on a synthetics platform or something like that, or buying art, all those things. There was a time, so it's really
mm,
it changes the tokenomics, so it's built for now this very multifaceted dynamic Tezos economy full of apps and different commercial sectors, whereas in the past and originally the
yeah.
token and that economic system, that old Tezos tokenomic system of just baking and delegating, was really designed for before that, when it was really just about that
Governance.
system in itself. Yeah, that and yeah, just delegating. So it was expected, like either you're holding on to this because you believe in it or you're selling it. So it really just catered to, I think, those kinds of extremes, and also didn't let anybody capitalize off of the commitments that they had by putting something in a locked state that they wanted to. And that's another thing about the good friction and bad
Mm,
friction. It's like, oh, but people lock it. They don't want to lock it. And even today, as I tell people about the new staking feature and how it's an option, like, but I
mm,
don't. But can I just not lock it? It's like, well, you got to do something. The whole point, people aren't just there to give you free money. I mean, the whole point is that people are committed to this, and that's why Tezos has value at all.
yeah.
So you can't have your cake and eat it too, and that's a good thing.
Yeah, it's interesting
Yeah.
to see. Like with the staking feature, you can actually, especially if it's whale activity, right? Staking and
Mhm.
unstaking, you can actually have the market actually has some lead time to react. Like this amount of staked tokens is going to be unstaked, and so I guess for the bots could come in and see if they can arbitrage that opportunity too. So there is an incentive for price stability and upward valuation, and hopefully we get to see this
Mhm.
play out a little bit more in the markets. And
Yeah.
wanted to actually contrast another example that's very hot for an L1 right now. Hyperliquid. They have this hype token that carries governance features, and they also do quite good work when it comes to liquidity design, and enables fees to definitely outpace their emissions. They have like a central order book design, fully on chain. They have their own like liquidity provider vault, and they also place bids programmatically, so that they have a full order book. I'm just curious to know, like, with this sort of architecture, and other DeFi innovations in the space, like what does it tell us about the direction of DeFi? Are we kind of moving like towards from just like governance tokens as just pure carrots to like governance fully baked in, right? Within a native token itself. Yeah. Curious to know your thoughts.
Yeah, I mean, to me, there really is no other governance than on-chain governance. And like, if you don't have on-chain governance, there's a way in which your blockchain is governed now, and maybe it was different in the past, and maybe it'll be different in the future. But there's that level of uncertainty that if you're dealing with DeFi, if you're dealing with finance, if you're saying, let's get these financial institutions to start moving trillions of dollars, literally quadrillions of dollars in derivatives, if you bring that into the picture, to bring them
Mm,
in to the on-chain world, how are you going to do that when, like, you have what's ultimately not decentralized governance, but just a very coordinated centralized system that gives you the option to fork and make your own centralized system. It's not a very savory way of doing things. I think one of the things that gives the United States and or democratic countries a lot of value for their central bank assets, for their treasury securities, in particular US treasury securities, is the fact that people can feel confident that it doesn't matter who's around and running this government today. They could all go away. Generations from now, this will keep going. There is this kind of there's an argument to be made that if you a true
mm,
democracy, a true republic that can be self-renewing in that way, is in some sense the first AI, that it can, because it
mm,
can live autonomously like that.
yeah.
It's not living on the day to day, and then that's what makes it the bedrock of all other these types of assets, the bedrock of all other securities. So, I think that's when you look at Hyperliquid, it does. There is what they've been able to bring in is a very powerful a base of users and a lot of liquidity. And I think the ability to be able to run a chain, a protocol, some would call them app chains, where it's like the
Yeah,
whole
like an
chain
app
is designed
chain.
for this kind of app. You definitely get the benefit of what that, like this internalized system, which is how Hyperliquid is designed. I think what's great about like being a part of something like Tezos is that we're building on our, we have exchanges, we have Tezex, we have Tezfin, we have USDTez. We're going to be building perpetuals, we're going to have all kinds of different derivative type applications that we're going to be building on top of this, especially when we get to Tezlink and everything we'll do with that. But it also, you can't live in an island. It needs to have this sort of a virtuous cycle with commerce. And so you have this whole art ecosystem, for example. Wow. And you can have this direct connection with that and actually have a real living economy, like a nation with its economy. Like it has, stuff that it builds and exports and people buy it and they like that stuff. And then you have the bank and you have stuff that they do over there. And the way these two things interact with each other, it's an explosion in a bottle. And they need each other too. I think for long-term health and sustainability, that's the best recipe. It's not the only one, but it needs to be there. And it also needs to be built on something that has on-chain governance. So the actual financial institutions and really anybody can have the confidence in the singularity of it, within the diversification of its governing base of users. So that's what makes Tezos the perfect chain for DeFi. Because it is.
That's a very good explanation. Thank you, Kevin. Now, I was going to say to your point about sovereign ecosystems again, and you mentioned US treasuries. I was going to say, let's talk about the bigger picture, which is the climate for DeFi in the US this year. I noticed the US just passed the Genius Act in the Senate. A digital assets working group has been recently established. Bo Hines was leading it, and then he left for Tether. That was news. But from where you sit, you're based in the US, if I'm not mistaken. How would you describe the climate for DeFi builders in the US right now? Like biggest headwinds, and where do you see momentum?
Well, it's fundamentally different than where we were a year ago. And what we started to see under the previous era, under the Gary Gensler era, and people being sent Wells notices all the time, is what I felt was very much almost a total suffocation of the US blockchain industry. It was like nothing I had ever seen before. I'd seen people get worried before. I'd see people take caution in what they did and saying, well, we don't know if this is going to ruffle feathers or not because there's not a clear legislative path to this yet. But it's not like it prevented people from finding a way to do stuff. But everybody just stopped in like 2022, 2020, or 2023. People were just stopping because people were worried about the politics. Now it's like we're invited to the table. And the Genius Act is so huge, not just for stable coins. I mean, for people that don't know, it's that's the stablecoin kind of legislation. It's so much of what we wanted over the years, which was to say, look, we're here to promote the US dollar as a standard. We want to play by the rules. Set the rules, we'll play by them. And it's very important to do that. The things that you should be worried about are maybe algo stables, which would completely skirt around any kind of regulatory framework you would ever design. But they're going to be beating us if you don't let us play in the sandbox. So now I think I stay away from political discussions as much as I can. So I'd say one thing that I can say, well, we'll give credit where credit is due to this administration. They did live up to their promises when it came to blockchain crypto. I know there's definitely points of criticism. It's like, oh, but they're doing this. Look, I mean, you have no idea how bad it was before. Like this is a night and day difference. Thank God for this. So it's a very big change. But what it's done, for one thing, a lot of people think, oh, well, this is great for Circle and Tether, right? No, it's actually really good. On some level, I think they might be upset that, I think they've been able to exist in a way that because there wasn't a defined path. So it was kind of up in the air in many ways. And they could do things that I don't think they're going to be able to do in the future as people move to the Genius Act provisions, which is, for one thing, like, yes, you can start earning off of the collateral and ways to pay your operations and have a surplus, but it's either got to be in cash or in US Treasury securities. And so that's something where I think that it makes sense, the logical sense of, yeah, that supports the US dollar in as direct a way as you possibly can and doesn't compete with it. And I think it's great for people like us. It's great for the small stablecoin startups, because I think the concern that a lot of people may have had with, and I don't think it would have had ruffled as many feathers if it weren't this way, is that we were seeing a monopoly, duopoly of stablecoins for years. And that's what really got a lot of people concerned, because if you don't have the ability to, you don't have a diversified like pool of many different competing stable coins, well, then they're going to call the shots way worse than any kind of whatever accusations you want to make about traditional finance and how they cooperate in a manner that exercises too much control. Well, this is way worse. This is like just you're telling me two entities to control the US dollar as the standard that everybody uses. That's terrifying. So it's rightfully terrifying, and I think it was really good that the Genius Act was designed in a way that encourages implicitly startup stablecoins to go and to grow and to explore new economic opportunities and offerings in a way that we couldn't do before. And now we can actually open up and have maybe the types of partnerships and relationships and integrations with entities and solutions that wanted to do it for all these years, but they were just waiting until there was more regulatory clarity so they could de-lever their own risk. So now we can do that. So it's awesome. So yeah, there's a lot of dreaming that's being able to be turned into reality now. So I'm really excited for that. For USDTez, this is what we've been waiting for. We designed USDTez and operated it in a manner that was very much aligned with the provisions of the Genius Act that a lot of stablecoins are now starting to employ now. So we've had years of monthly attestation reports, which even Tether and Circle, they weren't doing monthly, when we were doing it, when they weren't. We have segmented accounts, segregated the operating account from the collateral account, of course, being able to have one-to-one backing. We didn't even lend any collateral ever, not even in very safe or low margin reserve fractional lending. No, we kept it one-to-one, kept that transparent on-chain. Anybody could see the on-chain reserves anytime they wanted. So actually the attestation reports were kind of overkill on that front, but we had it anyway. So now we can move into a manner that can look into what can we do with this collateral, that and we can use it in a manner that is not just something that will make us self-sustaining in the way that we have wanted to. We've been doing a lot of bootstrapping, doing stuff at cost, making sure we laid the groundwork, but now we can actually create a self-sustaining operation here in a manner that can see it through 100 years in the future, but take the surplus rewards and reward that to the Tezos community and the Tezos ecosystem, so that when people use USDTez or interact with it, it's not just something that's good in and of itself, but it's an instrument that supports this Tezos identity, these Tezos people, these Tezos projects, these Tezos artists, these Tezos developers, because we can give grants. We can actually have an art collection. So imagine that we could have a permanent art collection just for StableTez, just for the USDTez. There's so many different things we could do. We can have hackathons and accelerators for this. We can create rewards programs that are for Tezos users and Tezos wallets, as opposed to what maybe multi-chain coins have to do, which is really focus on other things or spread it all out. So like this is all about, so we really want to make USDTez, this is like the Tezos, this is the stable coin that's most beneficial for Tezos and the Tezos ecosystem. So we can do that now. We can now unveil those types of designs.
That's exciting. I'm looking forward to all these features being shipped out. And I realize we're at time. Sorry, Kevin. So I have one more question.
Oh, no worries. For sure.
Yeah. So you've been through the whole cycle of stablecoins, bridges, lending, governance experiments, and now I feel like we're at this point where the next 5 years feel very pivotal. Like, what do you think is your outlook in the whole governance and DeFi space in this time frame? Where do you think we're headed?
I'm glad you asked this. I've been thinking a lot about just the evolution of how the finance world at large has been looking at crypto blockchain. And we always start at very primitive levels, and then we grow into more advanced, sophisticated things. But it always takes the most basic stuff to get us to those levels. So, a year ago, we started seeing the first Bitcoin ETFs, and then we saw experiments and now chatter about other kinds of ETFs. There's Bitcoin treasury funds now, and now they're looking into other stuff that can also be done. I mean, I'm really excited to see 5 years from now the kinds of assets they can start to look at in the finance world at large that originate on chain but have off-chain value beyond just the basic currencies. So like perpetuals and indexing those perpetuals. Like a perpetual is like a unique blockchain DeFi instrument. To be able to index them and then to create to securitize that in a manner that can be accessible off-chain. I think that's going to be that to me is the real catalyst moment, because that's when it's like, look, it's not just the fact that we have assets that come from on-chain and then you're seeing value of that and trading it off-chain, but here are actual inventions, assets that come from these platforms that could only be done on blockchain. And these are unique value types. And now you can have access to that, where we're actually exporting these on-chain creations, these complex, only can be built on blockchain creations, into something that can empower the economy at large. That to me is going to be huge. And that's going to open the door to endless amounts of derivative types to be created.
That's very exciting. Interesting that you mentioned perpetuals. To me, the way I understood perpetuals, okay, for those of us that are not super finance savvy, like perpetuals are like a form of futures contracts, but they're basically in perpetuity. Correct me if I'm wrong. Because in TradFi, you
so they
have
don't
like
expire.
a specific expiry date, but on chain, like with blockchain, you can actually let it run forever. Because the tech enables that. And so it's interesting how you're saying these can be brought off chain, so that people can look at it and index and then take a market position.
You can assign you can look on chain and see value, and you can see numbers changing and moving and prices change, and you can create off-chain instruments that are based on those numbers and those values that are changing. So I mean, it's always going to live on, this stuff is always going to live on chain, just like the Bitcoin that these entities like MicroStrategy and Grayscale and everything else, like, they have what is their treasury, but they're always living on chain. And through now, I think their customer base still lives with the most basic of blockchain things, which is just Bitcoin and just the value of Bitcoin, and that's it. And when we get to the point of debt primitives and then derivatives, that's when everything's going to change. And we're going to have derivative types then in 5 years that we can't even imagine today, because they're going to employ technologies which some of the needs of them haven't even been deployed yet on any chain, but they will be, and that'll be even more rapid. But we have the acclimated user base. We have people who are interested and excited, people who want the edge. This is where the momentum is. And eventually it'll envelop the world and all of finance, whether it's understood yet now or not. But it's good to have a front row seat.
I know, right? Like, I was gonna say, okay, one more question.
Sure.
I recall that you were funded by Draper Gorin. I'm curious to know from their point of view as a sophisticated venture investor. I know they approve Bitcoin. Like Tim Draper always wears a Bitcoin tie wherever he goes. Like what's their take on like maybe diversify? I know they diversified into Tezos as well, but like curious to know that intersectionality between both their Bitcoin and Tezos investments, how they're taking it forward with their own investments into startups in the space.
Well, I'd recommend having Alon Gorin or Tim Draper on the show next time.
Wow.
And they'll be able to tell you. Yeah. And I'm sure they'd be both or either would be happy to do it. And definitely, I think what's been great about what I love about my relationship with that entity, first it was, now it's Draper-Goren Blockchain, that's the succeeding entity today, is that they are so open to the economic logic that doesn't try to just copy the norm. And I think there's a pragmatism met with this very ambitious disruption radar that they have.
Yeah.
So, and I see that in a lot of the, like, you'll see Tim Draper talking about it. Like, he'll wear the Bitcoin tie. He was there. He saw the opportunity from the beginning. Definitely, he was able to capitalize off Bitcoin better than most. But also the way he thinks and talks about disruption and how things are going to change. He's looking at an environment and a landscape that looks nothing like the world today. He's already looking several different steps down the road. Which is hard to do when I think when it comes to a lot of money being invested for venture capital, things like that, venture capitalists tend to play it safer than a lot of people imagine, which is why it's a very hard game to be in. But it is human nature to want to kind of just follow what others have already done. Something that has already succeeded, to just get in on that, to really kind of break through and to say, look, we're going to be leading the innovation of the technology of tomorrow, and let that vision guide investments. I think that's a rare quality to see. So I like, looking for
sure.
I like VC firms that can do that. I like venture capitalists that can see that. And definitely a lot of the, and just not even just them, but other venture capitalists that I've spoken to about Tezos that are interested and want to come in, they're thinking in that way too.
That's awesome. Yeah, it's good to see this kind of visionary VCs in the space. And let's discuss having Goran on the show
For
later.
sure.
I'll take it offline. Okay, Kevin, thanks for joining KatKast. What we all take away is that governance isn't just about, preventing conflict and avoiding drama, but it's really about structuring growth, participation, and trust so that systems can compound over time. So thank you all for tuning in. For our listeners, don't forget to subscribe to KatKast for more conversations where governance meets growth. All right, till then, keep in touch. Thanks, Kevin, for your time.
Thank you.
Bye.
Bye. Yeah.
All right. Okay.
It's convenient enough.
You.
Cool.
All right. I'm going to make a quick intro and then I'll introduce you onto the show. So